Yeah, Kelly, good afternoon, and thanks for having us on again. Look, we are upgrading the sector today to a more favorable view because a lot of the airlines have traded off since, the highs that they reached back in April. For Americans specifically, though, they do have a pretty large balance sheet right now that they're going to have to pay down over the next few years. And more specific to our call, we're actually long the ultra low cost or low fare airlines. So things, we upgrade Southwest today. We're also long Spirit, Frontier, Allegiant, Sun Country. So we're trying to stay focused on carriers that actually have lower seat economics, because what we don't really know, and I think Delta would say the same thing today, is when business travel fully comes back. And I think for the more levered names like American, Delta, United, we really need business travel demand to approach levels that we saw back in 2019 before we get to see them, really paying down some of those big debt loads that they took on.
Yeah, sure. So let's ask about the holiday booking trends that you are seeing. How strong are they? Because, up 50% from last year, last year was so bad. So tell me where you see kind of the most operating leverage from these higher booking rates.
Yeah, what we're hearing from most management teams right now is that the holidays are, quote unquote, booking more normal, so what they would expect in a non-pandemic period. Where we really saw the weakness from Delta peaked, was back in August and September, which obviously led to a pretty soft fall period here. And a lot of carriers guided down 3Q and said a lot of that would carry into the beginning part of 4Q. But I think the expectations are, and remember, we're just missing that business traveler during the non-peak days during the week. So Tuesdays, Wednesdays are very light right now. Fridays and Sundays, if you look at the TSA screen data, are always pretty much peak the last few weekends. So, people are obviously not afraid to travel for leisure. I think it's just we need to get people returning to office. Once we get into that routine, then we should see business travel demand recover. And we're thinking, beyond the holiday period.
Can you make some distinctions for me between the Southwests of the lower cost carriers and the others you mentioned, Allegiant, Frontier, Sun Country, and Spirit, as to where the quality is among those companies? Because some of those companies have spotty performance records and sort of public relations or public acceptance.
Yeah, Tyler, thanks for the question. I'm going to be a little careful with this one. Objectively speaking, though, Southwest on the large cap side and Allegiant on the small cap side have very manageable balance sheets, almost no net debt to even negative net debt going into next year. So from a financial perspective, they're actually going to be at the top of the list. You're probably referring to some of the operational issues that a lot of carriers had this summer, especially Spirit. Even Southwest had some. Look, we have labor shortages across the transportation supply chain right now, even on the freight side. We can't get containers and trailers to the retailers. The airlines are having problems as we ramp up operations and getting back to pre-pandemic capacity. So people are having to pay more. It's a lot of airport staffing issues. I think this summer was a real growing pain for a lot of carriers. But presumably, we should solve this with higher wages and hopefully more employment going forward.